Hello, this is Alexander Green, Chief Investment Strategist of the Oxford Club, and today I want to talk about how you should look at 2023 as an investor. You know, New Year's is a time generally when people think about resolutions, but if history's any guide, most people by February, those resolutions are long forgotten or not fulfilled. And it's important as an investor to have a resolution or a set of resolutions that you stick with. So today I want to talk about the resolutions that you can make now that will lead to a much more profitable 2023. First of all, if you look back instead of forward, it's a big mistake, because if you look back, you think, wow, I wish I'd gotten out here, or I'm so sorry I bought this there. And the problem with that is you should be more interested right now in where your portfolio is going to be 6 months from now, a year from now, 5 years from now. When you look back, you can feel regret, or you can be angry, or you can be anxious. But if you look forward, you can see that this is an opportunity. Every sell-off in the past has been a buying opportunity, and there's no reason whatsoever to think that this sell-off in 2022 isn't another opportunity. You know, millions of investors wish that they could invest like Warren Buffett, the chairman of Berkshire Hathaway. And it's easy to see why. $10,000 invested in shares of Berkshire Hathaway in 1965 are worth over $250 million today. Warren Buffett does things the right way. What has Warren Buffett been doing in this bear market? He has put not just millions, not just billions, tens of billions of dollars to work in this down market. And a lot of the things he bought are lower than when he originally bought them. Is he afraid? Is he anxious? No, he's happy. He's excited that he can buy more at even better prices. And so if you want to earn the kind of returns that Warren Buffett earns, you have to be doing the sort of things that Warren Buffett does. And he uses down markets, like the one we've been in, as an opportunity to buy, not to sell. Secondly, if you're an investor, you should never have short-term money in the stock market. If you've got a real estate closing in 3 months, that money has no business in the stock market. But if you're investing for goals that are 3 years, 5 years, 10 years out or longer, then the stock market is absolutely the place to be, as I'll explain in just a moment. Thirdly, you want to have an asset allocation. Yes, stocks have performed better than anything else over the last 200 years in the United States, but there are tough times that it pays to diversify. So you should have some of your money in bonds, some of your money in real estate investment trusts, some of your money in precious metals and precious metal equities. And most importantly, you should realize that the odds are with you. Over the long term, the stock market is a very good bet. In every 5-year period, the chances of the stock market going up, if you look back, any starting point in the last 100 years, 5 years later, you'd be up 75% of the time. 10 years later, you'd be up 86% of the time. 15 years later, you'd be up 94% of the time. And 20 years later, you were up 100% of the time. So if you are a long-term investor, as you should be using 2023 as an opportunity to accumulate great stocks at beautiful prices that didn't exist a year ago. So with that in mind, stick to our principles, think long-term, use this sell-off as a buying opportunity, and 2023 will be a very good year for equity investors. That's it for today. Again, this is Alexander Green, Chief Investment Strategist of the Oxford Club. And for great information all year long, be sure to subscribe to this YouTube channel. Just click on the button below to get great information on how to manage your portfolio all year long.